great opening we had for the day, right? With the Deputy Governor addressing the session. And I think remarkable work is going around from the government standpoint as well, right? In connecting the ecosystem and giving the financial inclusion a lot of importance, right? So, so thanks everyone for joining for this discussion. We have Ms. Gay Santos, so we'll start with her with a brief introduction. Ma'am?
Introduction about
yeah.
Myself. Yeah, so I wear many hats, of course, working with Grover. I'm a financial inclusion chair for the Financial Executives Institute of the Philippines. It's one of the leading organizations of CEOs and CFOs in the country. What else? A trustee with Edison here for FinTech Alliance. And of course, my full-time job, which is water.org. I'm the regional director for Southeast Asia, and we have a touch point with financial institutions because we work with financial institutions to develop loan products dedicated to water and sanitation.
Wow, that's a great cause, ma'am. I think ESG and sustainability, financial inclusion, these are really the cause. I think it's great to have you on the panel today, ma'am. Yeah. And we have Mr. Edison joining us today. Edison, a brief introduction to you. I think we did had a discussion with John earlier. Yeah.
So yeah, good morning to everyone. I'm Edison Tsai, president of SeedIn Technology. We are a Southeast Asia-based crowdfunding platform, and our platform basically matches SMEs across Southeast Asia to investors around the world. So we're currently operating and we have funded projects in Singapore, Taiwan, Cambodia, and Philippines. And we have investors from over 80 countries that are helping small to medium businesses grow and provide sustainable financing for companies, especially those in the small to medium business market. So I'm also, as Gay mentioned, I'm also a co-trustee of the FinTech Alliance, which is the largest FinTech organization in the country. We have over 100 companies and that are in various industries, and we will be also launching the up-and-coming Bagong Pilipinas Country Pavilion in the next week's SFF. So just a bit of plug there. Thank you.
Thank you, Edison. Maybe I just want to start with John, right? So to see, because one of the important aspects I picked it up from John, from David's presentation, is the back end, right? He really highlighted that, the reconciliation, the back end is not well done, right, in the payment side of the world, right? So maybe in your perspective, what do you think are the key factors someone should start looking at instead of just putting up a website or just maybe giving an API, right? So what do you think someone should start looking at as a core principles or values of getting into any of this automation use cases?
Sure. Yeah, I appreciated Yusek David's stressing the foundation, the back end.
Yeah.
When we started UBX 5 years ago, less than 27% of the Philippine population had a bank account. And of that 27%, most of them had a bank account because their employer made them get one so they could get paid. And they take their ATM card to the ATM machine on payday and they drain it.
Yeah.
Okay, so even though 27% were technically banked, I would suggest to you that the vast majority of that 27% were underbanked, very underserved. The observation that we made 5 years ago was, and it was great to see Berna from the BSP, they've made some progress. But 5 years ago, when it was under 27%, the other observation that we made was anyone with a mobile phone and an internet connection were using digital platforms. And our thesis was, can we turn the banks of this country, the financial service providers, into an aggregated back end that could be accessed through a simple API or simple apps so that they can be embedded into these digital platforms that we're actually acquiring all of the people in the country? And can we use this concept of banks as a as a balance sheet operator, as a consolidated back end, as a means to include more people in the financial system of the country. So I liked what David said. I agree 100%. And to be quite honest with you, that is 100% of our business model. Yeah. And we work with Edison. Edison's SeedIn is one of the entities that's taking risk on our lending platform that we embed into other digital platforms like Foodpanda and Lazada. We work with GAY, or we will be working more closely with GAY as we embed financing for some of the water initiatives. So obviously I'm biased, but I think we're making progress, and as Berna pointed out, it is working. We're making progress.
Yeah, in fact, what you said earlier in your session, John, right? So you're giving bank into the hands of people, right? So if they're running a mom and pop store, and you're able to do the bank there, right, through agent banking, right? That's really great, because you don't need to go to a physical branch and start doing stuff, right? I think that's a great initiative you guys have taken. And what do you think the banks should look at to adopt these kind of models? Right? These are really thought-provoking. It's not easy.
I'll start, but I'll pass it on to Gay and Edison. I think the banks have to embrace what is now being called open finance. Yeah. So we've presented an opportunity to distribute banks and other financial service providers, like SeedIn is a non-bank but a good example. We've provided the opportunity to distribute that product to more people through an embedded experience, and we get banks to participate because they see the business sense or the market pull, and they see that opportunity. I think, but not all banks do, and I think there's a regulatory push now that's coming. The BSP has a framework for open finance. But I think instead of waiting for the regulator, I think the banks should open up today. Does it cause more competition? Yes. But it also opens up expansive new markets that, quite frankly, through a traditional branch network, you just can't reach. So that's what I think banks should do. I think banks should don't wait for the regulator. Open up your products and your data, and with customer consent, let's bring financial services to the rest of the people in this great country that have really little or no access.
Yeah, that's great. In fact, I was having a chat with Edison, right? So there's a lot of stuff going around crowdfunding and blockchain, all the modern stuff, right? So how do you see Edison as how these are going to impact the banking system as a whole, right? So if I'm running a bank, if I'm I'm running the operation, so how am I impacted by all of this new embedded finance and all of these new topics?
Right. As a Southeast Asia-based fintech company, we're a non-bank, but at the same time, what we realize or what we have experienced over the past years is that fintech companies are providing more and more banking services, and at the same time, banks are becoming more and more like a fintech, running like a fintech company by being more agile and also more customized with their customer experience. So one of the key areas that we have also hypothesized and as well experimented is that the key word is decentralization. So we provide what we call a decentralized form of financing that match makes businesses to the direct investors and providing a higher yield for these investors. So by removing a certain layer of control and centralization, we are allowing both sides to benefit. And likewise, what we have also seen in the past few years is that banks are offering, and as they go more and more digital banks, we have seen the rise of digital banks and providing higher yield investment products as well. So this is something very interesting because as we move towards as we blur the line between what the definition of what banking means, we're going to see more and more cross references as well as cross collaborations between traditional banking industry and the fintech industry as well. And we have actually, like what John has mentioned, we have worked extensively with UBX, with Union Bank, in providing more products as well as services for the underserved, especially in this SME sector. So that is very exciting for us, because we also see that there is a huge potential for this underserved market. Whether it's the area of sustainable finance, I'm sure Gay will expound more on that. And of course, we are also working with water.org for identifying companies that are in the sustainable space. As we have done in some of the some of the clients that we have served, that includes the sustainable, that includes the green and blue companies. So companies that are in the vertical farms, hydroponics, as well as water desalinations, and solar power, right? So these are some of the companies that we have identified, because what we are looking for are what we call the impact investment. We're trying to make impact investment to companies that make a social impact in alignment with the ESG initiatives of the UNDP. Yeah. Thank you.
I think definitely impact investment is something which really caught my attention, right? So maybe moving on to Gay, right? So how do you think this impact assessment is going to influence financial inclusion and ESG and sustainability initiatives? Because these are the core values, right? When I look at this country, it's not just technology, right? I also see there's a lot of value system embedded, right? And ensuring how we make this financial inclusion happen, and reality, ESG practices, because there's a lot of talk in the town in terms of all these principles, scope 1, 2, 3, data collection, right? So what is the impetus you think from a banking standpoint, we should look at for these use cases, ma'am?
So coming out of the pandemic, I think one great lesson we learned is like we're all connected. And the end goal should be sustainability beyond inclusion. It's a good time for the banking community, for the technology providers to look into ESG. And as you know, there were influx of circulars from Bangko Sentral and Pilipinas, but then we are at a nascent stage in terms of how do we operationalize this. But beyond, tech is only a means to that end of operationalizing. I think the thing that matters most is how do you embed that mindset and translate that mindset into process and systems and information that can equip CEOs to strategize on ESG. When you say ESG, I mean, it's intuitive. We're going to talk about environments, social issues, governance, but ESG is more than that. ESG is about the well-being of the whole community. It touches on indigenous people. It touches on even labor issues. That being said, there is that clear opportunity for technology providers to help CEOs and banks to strategize in this space. How do you think outside the box in terms of embedding that culture among CEOs and an organization to have ESG not simply as part of a CSR, but as part of the culture of the organization? So having worked with the World Bank and IFC, of course, for decades, they have dealt with ESG. What I have observed and I have been part of developing systems for IFC is it's really embedded in the credit risk rating templates, the workflow, even in the discussions, in the boardroom, management discussions, even in the MIS reports. I mean, it's embedded there. How you capture the metrics to measure ESG. How do you rate a potential investment integrated in that credit risk rating, that there's an ESG component? And how do you translate that to process systems? And of course, I mean, reflecting the mindset of the organization. So there's a lot of opportunity there. I'm glad with UBX, Seems like you are the first mover. Thank you for reaching out. And I mean, there's still, I mean, I think I challenge everyone to be part of those first movers. And again, clear opportunity. Banks don't know where to start, especially the small banks. How do we move on ESG?
Yeah.
We have to comply. That's reality, right? But it's beyond complying. It's something good. So why don't we go towards that direction?
You know, I've been thinking about this for a while since we've been working towards an agreement with GAY and water.org. And maybe this will also make the whole sustainability thing eminently practical. I think the financial services community can actually learn a lot from lessons that have been learned in what we call the quote-unquote sustainability sphere. So when I started learning about water.org, I learned, you know, I'm worried about financial inclusion. I learned that there's still some places in the Philippines that are still living off of surface water, if you can imagine, right? So that's a very critical problem that Gay and the team are working on. But there's other awesome success stories. A lot of people forget that in the 90s, treated water only reached about, I think, I don't have the stat, but I think it's like 60% of the national capital region. And with the intervention of government, David, the water concessions were created. So this is Manila Water, and what's the other one? Manilad. Yeah, they sound the same to me. But 99% of the areas served by these concessions are now providing, and for a long time have been providing, uninterrupted supply to clean drinking water. In fact, when we had some water disruptions a few years ago, you know, people were complaining, but it was like nothing compared to how bad it was not even 20 years ago. So when I think of that in the context of financial services, how is it, I mean, great progress as reported by the central bank, but how is it that 50% of the population banked? How is that not a crisis? And when it comes to insurance, it's even worse. The penetration of insurance in this country compared to banking is dismal. You know, the insurance agents and the insurance companies call it the protection gap. It's a protection crisis. We all have stories. We all know people where an unfortunate event has happened. There's a lack of protection, and the individual and the family are wiped out, often for a generation. So I think the financial services industry could actually learn a lot from what's already occurred, for example, with the water situation in this country.
Thank you, thank you. I think we need a lot of cloning of John's mindset among the CEOs here. That said, I want to elaborate on use cases. I mean, AI has already been applied in the water sector. In what way it's being used to see where the inefficiencies are in terms of flow of water, and that in return helps us what we call address the non-revenue water, the leakages in pipes. Beyond that, AI has been used through what, I'm gonna laymanize it. You know, AI can be attributed, I mean, one of the features of AI is machine learning. So it has been going towards the direction of language and sentiment analysis, right?
Yeah.
And tools are already being developed to monitor or interpret whatever discussion a CEO has in a boardroom. At what point ESG is being talked about through language and sentiment interpretation or analysis. So those are the very interesting use cases for ESG and AI.
Very nice. Edison?
As Gay was mentioning AI, it's actually, as we know, it's applied to all sectors and all types of businesses. So one of the areas also that AI was used in is in the credit scoring for small to medium businesses, because it allows us to encapsulate the financial stability and capability of small business, that allows us to give a credit score and for them to be part of the financial inclusivity map. Because only when we're able to map out the financial score or credit score of a company, then that is identified across lenders. Then we'll be able to say, okay, this company is worth credit, what we call credit worthiness, to establish that. And some of the things that I like from the earlier speakers, including Yusek Almirol's eGov initiative, is that it allows us to also shorten the EKYC gap so that we can provide more financial services. Whether you're a bank or a non-bank, I think this is the commonality, is that we are able to enable more and more people in the financial services and make sure that their personal needs and business financial needs are being met. And of course, providing intelligence through AI, machine learning, and the business model being the more and more decentralized approach.
If I may, because I really love what Edison's getting at here on AI. When I was speaking, I had suggested that AI is a profound paradigm shift, because a lot of the important problems, there are no rules known beforehand. In anti-money laundering, the way that the banks handle it today is they buy a system and then they define scenarios, which is just fancy language for rules. And the amount of actual money laundering that is caught is a tiny, tiny fraction. And Edison's bang on with the credit use case. The way that traditional credit scoring has done, there are 8 billion people in the world today, and only 1 billion people actually have access to decent financial services, including credit. So the rules-based, the old paradigm doesn't work. But AI, while we have to be careful, because of everything I said, the payoff is much larger than what we have to be careful about. Imagine being able to extend credit to the other 7 billion people in the world, right? And this is the potential, this is the promise of AI.
So I just want to echo that. I mean, definitely with the ability of AI to mine really huge critical mass of data that can help the CEO strategize. And possibly, I mean, currently financial sector, banking institutions are looking at the same guys in terms of lending. AI can help these CEOs diversify their portfolio with more confidence. Beyond use cases, I want to touch on other opportunities. As you know, I played a role in a lot of policies, laws, push in the SME finance. Currently, there are a number of laws, and each law has an IT tech component to operationalize it. For example, we have the Personal Property Security Act, which is about enhancing the creditor's interest so that there's no blind side if a collateral is used elsewhere, a collateral other than land, for example, accounts receivables, equipment, etc. That's already a law in place. But then a question of how can technology play in operationalizing that law? That law calls for a central repository of all movable assets being held as collateral. I think clearly AI has a role in that. In the horizon currently pending in Congress is the warehouse receipts law. Again, has a tech component. It calls for a central repository of all warehouse receipts being used or registered. Again, AI clearly and tech has an opportunity there.
I think we have been embedding stuff across, right? It's like ESG, ma'am, as you rightly said, it's not just a boardroom discussion, right? So we have started this being embedded into everything which we do, right? We are starting to collect data about income and the energy levels and all of that, right? The consumption of the organization, right? So what do you think as a low-code platforms are there in the market, right? So what do you think? Maybe a question to you, John, right? As you practice a lot of that. So how these components can help banks to achieve these outcomes, because AI is great stuff, right? So, but it has to be embedded. ESG is great stuff. It has to be done, and a lot of value which we are unlocking, right? So how do you think low-code can help in this journey?
Well, I think, as I alluded to earlier, as the paradigms change, the pace of change, the paradigm unlocks an even faster pace of change. So even when it comes to doing computation, we can't do it the old way, right? So now whether that's low code or whether it's using AI at UBX, about 50% of our code today is actually written by AI as we go. So whether it's one or the other or both, I think the banks need to embrace this, if only to keep up. And if we're being honest, a lot of us are actually starting from a deficit situation. So these technologies exist. I think they should be embraced and they should be leveraged because, if anything, the speed of change is only going to get faster.
Definitely, there is a lot of code debt, right? So tech debt, which is there, which has to be sorted out, right? Of course, this is a growing technology landscape, right? So maybe Edison, from your point of view, what do you think as a role of government and their policies, right? Because that's crucial. One is as an organization, what you are taking as your priorities and what you want to do, and what aspects would you think the government policies have a play in this to expedite this, right? So.
Yeah, so definitely, I mean, government plays a pivotal role, right, in terms of driving the industrial growth, because it's a dual, it's in parallel, because when industries progress, regulators sometimes are trying to play catch up as well. But at the same time, for new players that are entering the market, they also have to make sure that they're compliant with the local regulations. So as for example, like my company, when we enter any new market, new countries that we operate, the first thing that we ask is what are the local rules and regulations that we have to comply with, what kind of license that we have to acquire, and also what are the sentiment of the local regulations towards the business model. So what we think is that for regulators and for the government is one, they have to drive the adaptation of the new technology and make sure that they're in a safe, regulated space. I think we have seen that time and time again with whether it's blockchain or crypto or crowdfunding per se. There are a lot of things that we can learn from each other, and also for the government to be able to really adapt in terms of regulations. I like what you said, David, earlier, is cutting down, streamlining the process, right? Yeah. Because by streamlining the process, cutting the red tapes, we're able to progress as a nation. So I think that's really pivotal. And at the same time, providing that backbone, which is government as a service, which is very critical for industry players, because now we don't have to, even like in our financing space where you have disparate data sets. So for investors, for an individual, the data can come from various agencies, from PSA, from SSS, Pag-ibig, PhilHealth, and then for businesses, you have SEC, DTI, CIC, etc. So it's very helpful for industry players, like especially for companies like SeedIn who are providing a financial service, to be able to get a singular truth of data, and that is I think the quintessential dream that we have towards a singular truth of data, but at the same time there is what we call data sovereignty. Right, so the individual and data privacy is still being protected, and it's still being they are able to decide what kind of data they want to share, yeah, whether it's with the government or with the company that they're applying for.
It's a great feedback, Edison. I think to sum up, what we are looking at is AI is here to stay, right? And there are a lot of use cases, and we have started seeing this being embedded in our day-to-day life. Right, and ESG, AI, process automation, right? So I think all of these are getting amalgamated together, right? I think great conversation, guys. I think really appreciate your time. I think our panel will be around here, so we can, if you have questions, definitely feel free to catch up and discuss further. Yeah. Thank you.